Hello traders, my name is Christopher Vecchio, currency strategist with Daily FX. Today is Wednesday, August 6, 2014. These are your FX headlines as we turn the page to North America. It is a quiet North American session coming up. Only U.S. trade balance at 12:30 GMT and a NISR GDP estimate for the UK for July at 1400 GMT, but really we're seeing the euro and the pound come under pressure for some data that's already come out in the European session. On the pound side of things, industrial production, manufacturing production much weaker than expected, both month over month and year over year. 0.3 versus 0.6 expected month over month. Industrial 1.2 versus 1.5 expected. The manufacturing 0.3 versus 0.6 expected month over month. 1.9 versus 2.1 year over year expected. That was a June set of data. Pound is the worst performing currency on the day. The euro is not that far behind. Italian GDP negative 0.2% versus plus 0.1 expected quarter over quarter, negative 0.3% year over year. That's putting Italy back into recession territory officially, and I believe I read before that it's only been one out of the past 13 quarters in which Italy has had a positive growth figure. So right now the euro is sitting at fresh yearly lows of the day. Quite frankly, at this point in time, it doesn't look like it's a good situation for the euro ahead of the ECB meeting. It's slipping below last week's and July's pivot low. We're setting new yearly and monthly lows. The next level that I'd look into for euro as stochastics are pinched lower and we see MACD is still on the downtrend would be right into this first pivot that we saw back in November 2013. That's about 132.90. Right, elsewhere in the euro complex, euro yen looks like it's starting to weaken up as well. Euro yen getting rejected by the descending trend line from the highs that we had back on May 13th, June 9th, July 3rd. We had a small rebound initially away from the 2012, the February 2014 lows, and right now we're trading at 136.70. Right now we're still technically in the middle of a range that we've been carving out since July 10th. So at this point in time, I wouldn't necessarily want to take a short here, but should we see a break under that 136.20-25 area, the lows again that were set February 4th, 2014, we should be queued up for the next downtrend until level identified here, 135.60. Now, if there is a euro play that keeps us exposed to the fact that euro net positioning is extremely short, the shortest since the third week of August 2012, there is a potential for a squeeze. What candidate do I like more than anyone? Euro CAD, and that's just reflecting upon dollar CAD for a second. Dollar CAD continues to break higher in this channel, out of this channel, and it really is running through more and more levels of resistance, just moving through the June swing high here. Euro CAD could be a little bit surprising. It too came into long-term support recently, as well as former levels of the breakout from 2010. So here we are. We turned it as resistance, support. We came back into it again, support. Now double bottom. It looks like this double bottom would want to take us, if this is from 146.60 down to 144.40. It looks like we can squeeze another 220 pips out of it. And that's really driving us up into the high 148 to 149. Sure enough, we see that we have resistance, swing resistance in June right near there. Not saying that we're going to get there definitely, but EuroCAD may be a way to look for some long euro exposure in the sense that even though euro looks weak elsewhere, we know that there's a lot of positioning working against the euro bears right now. So that's it for me today. I'll be back tomorrow with another video. Look forward to seeing you then. We'll also be covering the ECB meeting starting at 7:30 Eastern, 11:30 GMT. That'll be in Daily FX, the front end. Look forward to see you there. Remember, risk management is paramount right now. Volatility is starting to pick back up, especially in equity markets. Now's a bad time to get lackadaisical just because it's summer. All right, see you guys tomorrow.